Sellers are listing higher than they have been and still getting full price, even with fewer buyers in the market. Inventory in Oklahoma City has dropped again, days on market is shrinking, and buyers are moving faster than they have in months. Here's the kicker, not every home is selling. So what's the difference between the ones that are just flying off the shelf and the ones that are just sitting stagnant? So in this video, we are going to break down all of these numbers and show you just exactly how you can position yourself to win, whether you're selling now or if you're just thinking about it maybe sometime in the future. And make sure to stick around to the end because I'm going to share with you the one move that you can deploy that will make sure you are going to net every single red penny from the sale of your house. So let's get to it, the March market report. So let's jump into the numbers to what homes are actually selling for in Oklahoma City and what that means for you if you're buying, selling, or investing, or thinking about it this spring. We are still firmly planted in a seller's market, and here is why. If you look at our month supply of inventory, we are at 2.54, which is down 8.63% over last month. Basically, this just means that the market is tightening even further. And while yes, a lot of these numbers are affected by the seasonality of it as we're coming out of the winter decline, the market has tightened ever so slightly. So fewer homes, more competition, put it that way. So on average, homes have sold for exactly their list price. Obviously, that is not just a blanket statement because I've seen plenty of homes, I've listed plenty of homes that did not sell for their intended list price, but as a general whole for all of the transactions that occurred last month, that we saw a 100% list to sale price ratio. Moving on to median days on market, we are down. Right now we're at 29, down almost 15% over last month. So homes are actually selling faster last month. So that is down from, I think, 34 last go around. And, you know, with more listings hitting the market, buyers, they're still pouncing on the right homes. It's a sign of strong and active demand, which is great for our markets. And well-priced homes and move-in ready properties are going to get snatched up, lickety split. Again, if they meet the buyer triangle trifecta, they are not going to be on the market long. If you are a seller and you want to appeal to that buyer trifecta, all you got to think, price, condition, location. Hit those three, boom, you're knocking it out of the park. And our median sold price, we are at $253K, which is up 5% over last month, which is a pretty sizable climb, to be honest. So this is one of the most telling stats, in my opinion. I mean, that's a pretty sizable leap in 30 days. Sellers are commanding higher prices and the markets is rewarding them. Buyers, stop waiting for a crash. It's not happening. Prices are going up, they're not going down. So if you are in the markets, if you are considering it, please stop waiting for rates to drop, stop waiting for prices to go down because we are entering the springtime and this is where you got to bring your A game. Things are going to get rough and tumble out there. Multiple offers are going to come back. You are not going to have as much time as you've had in the last, 4 to 5 months during the seasonal decline of the holidays and the wintertime. But with proper representation, or if you just kind of are sharp and quick on your feet, you can still secure the home that you're looking for at the price that you want and that the seller wants. So let's back out of all this. So what does all this mean? Market is tightening. We got less inventory. We have homes that are selling faster and the prices are going up. The only thing that had kind of softened was the tiny dip in sold to list price ratio. But again, we're still at 100. So who cares, right? All right. So that's just your general overall market trends. Now let's jump down to our median estimated property value. So on to the median estimated property value. This is kind of, well, I'll be honest, I love interactive data, graphs, maps, blah, 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 blah. And so if you look at the last 3 years in our markets, we are the blue line down here. Yellow is US of A, and then orange, if you can kind of see that down below, I can't really zoom in that well. That is Oklahoma State, right? So our data set is Oklahoma County, but really I'm just looking at all of Oklahoma City. So it encapsulates Nichols Hills and Bethany and all the other stuff. Look at that, man, for 3 years. Look how kind of just steady growth over that whole 3-year period. But if you look at a larger data set that goes back to July of 2008, it's a great indicator of our market and the strength and resiliency that it sees, as well as what you are able to purchase in our market versus in the rest of the rest of the US. It is so affordable here that's the hill I will die on. OKC is a wildly affordable town. It's got tons of great things going for it. And if you have questions about what life is like here, just drop something in the comments and I'll get back to you. So our median estimated property value was, call it $242K. That is a 1.5% climb over last month, and year over year, we're up almost 3%. So what does all this mean? It means that home values are still rising ever so gently. These numbers suggest steady appreciation, which everybody loves. It's not the rapid double digits that we saw in 21 and 22, but it's still positive growth. So the values are moving in the right direction, and they're doing it at a price that's sustainable. A huge key takeaway, and I'll probably clip this and make a short out of it. If you've been relying on sites like Zillow or Realtor.com or whatever gives you an AVM, like a Zestimate, I don't think they call it that anymore, but a Zillow estimate, they're probably underestimating what the market is really willing to pay for that property. So if you need a professional equity report, or if you want somebody to actually comp your house the way that an appraiser would, hit me up. My team can come out. We'll do it free of charge and give you an idea of what that house will appraise for, or at the very least, what you could get for it in today's market. And investors, man, take notes. Check this out. 2.7% year over year. Say what? Predictable gains, man, not volatile spikes. That's what we like. Let's break down these new listings, yeah? So we're gonna start with the number of properties at 1064, which is down 16.8%. That fell sharply. What else can I say? Fewer new listings is a tighter supply, right? And again, all of these numbers are going to be affected by the seasonality, the seasonal decline coming out of the winter months, but we did fall. As you see the peaks and valleys of yesteryear, it will repeat, because history repeats itself. If you combine that with the low overall inventory at just 2.54 months, that will make that drop a lot more competitive. So you buyers, man, the options are drying up, but they're coming back around. It's coming back around again. Hey, this is for the people of the sun. Sellers, your listings are going to get much more attention just because there's less competition. But again, that's also drying up. So price well, buyer triangle. Don't forget. Let's talk about the median list price, up 7.4%, $297.5. We've got to love that. So what does that mean? That's a big month jump over jump. That's a big jump month over month. And this reflects seller confidence, 100%. Likely driven by a couple different things, right? Market momentum, prices have been rising, so sellers are aiming higher, as well as just a mix of homes. We've had a few larger properties that have been listed this last month. Median price per square feet are also rising. Look at that, in the last 4 years, we were at $120 in May of 2020, and now we are at $164 in our current market. Total volume is down a staggering 20%. We are, again, peak, valley, peak, valley, peak, valley. You see the pattern? So we tried to peak, but we're going back into a valley. But we'll come back out. It's springtime. Fewer homes on the market means that there's less inventory volume, and the drop from January does suggest that there has been a slight pause or a hesitation from potential sellers as prices push upwards. There's strong demand pressure, but soft listing volume. You tell me what that means, economists of YouTube. That can keep driving prices up even if the supply doesn't rebound. Here we are in our active listing territory. Number of properties active in February of 25. We were down almost 8.5% at 2318. Inventory is shrinking, right? That's what that means. Seasonality, remember that. That's a pretty noticeable reduction for available homes that are available for buyers. Fewer homes on the shelf means that there's fewer choices and that sellers are going to face less direct competition. It adds more pressure to a seller's market for sure, but it also sets the stage for more multiple offer scenarios. And I think that we'll probably see a lot more of that as we get into the spring market when there are more options on the table. Our list price at $315K continues to rise, up 5% over last month. So really just matches the narrative across the board that the sellers are feeling very confident right now, if priced accordingly. Buyers, expect some higher asking prices, and sellers, this reinforces that you can list strong if you are listening to the buyer triangle. Price, condition, location. Make sure that you are analyzing it from every which way before you hit the market. Our median days on market dropped 13.6% to 51. Basically, another significant drop that it shows that homes are selling faster. Sellers, that urgency is back. So if your home is priced right and shows well, head down to the title company, collect your winnings. Price per square foot, as we saw from the last card, is also climbing. We are at 175, up 2.5 points from last month. And this just suggests that the overall values are also climbing, not just prices. So we like that. Our volume, we are down 8% over last month, but still striking it in at a smooth $1 billion hairs. Even though the total volume did take a little bit of a hit, despite the higher prices, the total volume is probably just due to the listing counts being a little bit lower. It reinforces the theme of tight supply, strong pricing, and quicker movements. All right, let's check out our new pending listings. Buyers are in motion. Starting out with the number of properties at 869, buyer activity picked up. 869 properties went under contract in February, up 5.5 points over January. Buyers are still actively shopping, making offers despite the rising prices and inventory tightening. The market's not just alive, man, it's moving. It's moving. More contracts, more closings, more people in homes, more opportunities. What more can I say? Just like Jay-Z. Let's talk about our list price. We're at $262.9, up 1.1 measly points over January. So just a modest bump, yeah, but shows that buyers are not backing off due to pricing. They're still stepping up to meet those seller expectations. Sellers, your price points are being met. Buyers, values are inching upwards, not downwards. Waiting's gonna cost you more. There's gonna be some patterns here. Sellers price right, buyers act fast. If the timing is right. It might be better for you to rent. So you never know. You never know. Median days on market was down a whole almost 30%. Holy buckets, down to 27. So that means that homes are going under contract a hell of a lot faster. That median days on market dropping so sharp is one of the biggest shifts on this whole report. So a key indicator there is that the homes went pending nearly a week faster than they had in January. So homes sit on the market a little longer in the winter, but again, coming into spring, you're gonna see a lot more homes that are flying. So you might not have all the time that you think that you may have if you are a buyer, because that urgency is back, baby. Total volume is up 6.5% to $293 million. More deals, slightly higher price points, more money moving through the market. Everybody loves it. Demand is translating into transactions. If you are in the markets, then now is a good time to talk. My number's down below. And for the most worthless card ever, the median living area square feet is dropped 2.5% to 1706, favoring smaller footprints. I don't know, quite frankly, I don't really care. All right, let's go to pending listings. Pending listings, what's about to close? Starting off at a pretty healthy climb of 1,208 homes that went under contract last month. That's up 17.6%. So pending deals had surged. That's a strong indicator that March and April closings are going to be busy. Buyer demand alive and well. Our prices are starting to creep up. We're almost at $275K for the median list price, up 2%. So this is one of the highest median price points that we've seen for pendings, meaning that buyers are not backing off from the sticker shock or the tag price. Homes were going under contract faster, 32 days on market, down almost 18%. That's a full week faster than last month, as I mentioned for the previous card. So this lines up with the urgency that we're seeing in some of the new pendings. So that's great. Well-presented homes are moving fast and buyers are watching the market closely. Our price per square foot is also rising ever so modestly to $158 per square foot. This reinforces that the value is also climbing. And our total volume under contract for February is at $428 million. That's up almost 20% month over month. So that surge is driven by more homes going under contract at higher prices. QED, plain and simple. Okay, sold listings. What actually closed in February, yeah? I'll tell you what did. 648 properties did. And that's up about 5.2%, not about exactly 5.2%, confirming that buyers are following through and closing, not just going under contract and busting it, whether it's on inspections or appraisal or financing. Median sold price for February was $253, up 4.5% in just 1 month. So that's not just seasonal fluff, you guys. That's real upward momentum, fueled by competition and tight inventory. The sellers are continuing to gain equity, which you gotta love, and buyers are willing to pay more to win. Sometimes you gotta pay to play. Sold to list price, we are actually under 100%. I might have been contributing to that factor just a little bit. So on average, homes are still selling at asking price with no widespread discounting. Median days on market, that is a pretty sharp drop to 15%, down to 29. So just under a month, it's a sign that the best priced and best presented homes are still flying. Even with the price increases, buyers are still jumping when the right home pops up. Median price per square foot has climbed to $156. So across the board appreciation, that is great. It's not being inflated by oversized homes. This is actual solid value growth. And our total sales volume also jumped up 13.5%, which I suspect next month is going to be maybe double that as we get into our April market. With that $18 million in closed sales, that is just a strong combined effect of more homes selling at higher prices, and we're just keeping some cash moving through the market. So in February, more homes sold, and they sold faster, and they sold for more money, and it is momentum, my guy. We like this momentum. We're going to continue to see this momentum for the next 6 to 8 months. So if you're a seller, it's your time to shine. If you're a buyer, let's get to work. Either way, hit me up. Information's down below. All right, let's check out this month's supply of inventory and start to measure this market pressure. So we're sitting just at about 2.5 months of inventory. And as you know, to be a balanced market, you need between 4 to 6 months of inventory. Anything north of 6 months is a buyer's market. Anything south of 4 months is a seller's market. So we are still square in a seller's market. Our month over month change down 8.6%. However, we are up 9% year over year. So that means inventory has gotten tighter. Yeah. But we're going to see that kind of come back around. That year over year increase is pretty meaningful, in my opinion, because basically just shows you that normalization is happening. So, even if it's slow, and we are coming back around to a balanced market. We were not in sustainable territory in 20, 21, 22. It was just absolute bananas. So yes, we are still in a seller's market firmly, but we are showing a lot of signs towards stabilization, normalization, and getting back to a balanced market, which we all want. So there you have it, the March market report for Oklahoma City. If you have any questions whatsoever regarding the sales or the trends or anything else real estate related, all of our contact info is down below. I'd be more than happy to figure out if now is a good time to sell or to buy for you, or if you're considering relocating to OKC. I field calls every week from people who are considering it, who are in the process of doing it, or who have done it. Thank you so much for stopping by once again. We'll see you on the next one. Be good to one another.